Let's talk about equity today. And I think in our business, a lot of times we use words that can be confusing to borrowers because it's not something that they hear all the time. And if you're a first time home buyer, you've probably never experienced how equity works. But equity can be described as the difference between what you're able to sell something for and what you owe on it. So it's basically the owner's portion of the value. So if you have a $300,000 home with no balance on a loan, you've got $300,000 in equity before expenses if you were to sell the house. If you've got a $300,000 home with a $150,000 mortgage on it, you've got $150,000 in equity. Not all of that equity is immediately accessible through a loan. So the only way to cash out and take advantage of all of it would be to sell. But what I want to show you here is how equity works when we're talking to first time home buyers about the difference between renting and owning. So if the average rent in Pennsylvania is say $1,700 a month and you have a $60 rental policy on there, you're at $1,760 a month versus a $225,000 house where your mortgage payment might be roughly $1,900. So I'm sorry, $1,970. So about $200 more than to rent. But what I want to do is just flash down here real quick, and I projected out just simply 12 months and 24 months to show you what it might look like. In a 12-month period, you would pay roughly $21,120 to rent a property at $1,700, which ironically is just about the same amount of money that it would take for you to close on that $225,000 home. But let's just go out a little bit further and say that you rented for 2 years to try to save. You would be paying roughly $42,000 in rent. So in addition to whatever money you'd save, you're giving your landlord $42,000, which is at 100% interest, versus accruing about $4,000 in equity on a $225,000 house. But check this out. In a 2 year period, you've accrued $29,000 in equity. It's only cost you $35,000 to own that property versus $42,000 to rent. And you have no equity when you rent. You're basically in a position where you're either going to have to sign a new lease, or go out and find something anyway, which ironically is probably going to be worth more because the house that you bought has appreciated in value. I know it's a tough time and I know it's not easy to buy a house, but please don't put yourself in a position to feel like you need to rent and save money. Those two things aren't equitable. They don't relate. So if you're in a position where you've got access to retirement money, you've got access to a gift from mom and dad, we can show them how in a very short period of time, whatever investment you make up front will come back to you. And you can compare that to what it might be like to pay a landlord. If you have any questions, you can reach out at andyloan.com. Have a great day.